Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday here, making it 1100 UTC. Big shout out to everybody that is watching the stream live today, and also a big shout out to everybody that's watching it on recording. How are we all doing today, fam? We well? Let's just make this full stream. So, Burned, MK, morning, guys. How are we doing? Or that's afternoon, just by a couple of minutes. Not sure where it is, what time with you guys, where you are in the world. Burned, I'd imagine it's PM for you as well. So just give it a couple of minutes. Just got some more people kind of coming into the show. C-Ron, happy Wednesday indeed. Nice midpoint in the week. The weekend is getting all that more closer. McRule as well. Good man. Always on the stream, these guys. Great to see you all. So guys, today, Alt Request Wednesday. Going to take a look, and really it's kind of up to you guys what you want me to take a look at. We're going to do some breakdowns. We're going to do some top downs. We'll do some nice clean charts and take a look at some assets from the top down. Waksha, good afternoon, good evening, mate. Not sure what time it is with you in the beautiful Singapore. I'm guessing evening for you, my friend. Just literally ticked into the afternoon here on a gloomy London today. Not too cold though, so can't complain too much compared to you guys. I bet it's pretty hot over there at the moment. Certainly a bit muggy. You guys have had quite a lot of rain, haven't you? I think, or maybe that was Thailand actually. Good friends of mine in Asia often updating me on how beautiful their weather is. So whenever it's raining, I think they message me just maybe so I feel better about the London weather. 7 p.m, fantastic. Getting ready for a nice relaxing evening, I hope. So, okay, let's crack on, guys. As we go through, I'm going to start off with ETH. Yeah. Like we do every week, we're looking at our levels here. All right, this was the key level capping the market on a weekly to the downside. So clearly of interest when we then had an aggressive move through this, kind of came to the underside and then sold off. So again, that's that kind of level that is of interest to me here. We didn't quite reach it the first time around. The other level here that we've taken kind of gives us our larger range midline, and then this has been split into two EQs, right? So two midlines. So basically what we're doing is we're looking in a lot of ways, especially on the higher time frame, for reactions around these levels. Yeah. So if I'm looking for positioning, if I'm looking for a really high time frame bias, typically I don't go as high as the weekly, but the weekly levels really, really interest me. All right. Weekly highs, weekly lows, daily highs, daily lows can be really, really potent areas with the right confluence to find where liquidity is resting, right? So just as a very quick example, you sweep the prior week's high here. We can see this low when that's left. So, it's one of those things. You're never just going to enter these things blind, right? But when you see key lows on any time frame, certainly for me, then I'm always really, really interested when we get to those areas. I typically play reversals. I do play continuation, but being on the lower time frames, I'm looking to catch these corrective moves. And ultimately, the bigger moves, when you do end up catching the top of that reversal, you can get some really nice compound trades in. But on the higher time frame, these are our levels. Now, what's the current price action telling us? Well, price came up, as we said weeks ago, when we had this close, what I'd call a strong close here, meaning that we've got a candle in this candle here that's got a lot of volume in the body. We get the strong close here. We had 2 weeks here, right, holding above this level, and ultimately we got the expansion. Now, in terms of how I look to trade ranges, if we come within a range, come back within the range, retest, then I'm targeting the mid-range and then the range high, okay? If we deviate, like we did here, for example, or we did here, we failed to close above here, price came back within, we look for that retest in this area here and weakness, and then ultimately looking to trade it back down to the EQ, right? If we hold it under the EQ, we're looking again for the same pullback here and then ultimately targeting the range lows. So this deviation here, we can see was really, really key. Price came down, had this deviation or fake out down here, back within the range, strong sell up here. Didn't quite get up to the high or the major range midline here, but it did come back above. But notice how we didn't quite get that retest here. Then when price came back down to here, before we're looking to short moves like this, I'm looking for that kind of initial move down, which is here. Yeah. And you notice we don't get price coming back down under this level. So ultimately, this becomes a deviation. Price comes back in the range here. And then this is the expansion higher for which we target the range highs, all right? But always via the midline. That's what I'm looking for. That's the kind of first point of interest for me. So where are we at the moment? We've done the same here. We've closed above this. We came up and tested the mid-range, and then we had this big, strong impulse move through it. We had this expansion. We've come into this key SR level here, and we haven't quite touched it. But again, look, I know people get really, really finicky about these levels and lines. Technically, they're more like areas. Okay, but what you're doing is you're having these on there as a real point of reference. I know a lot of really exceptional traders that draw these out as boxes, which actually I find can be a lot more accurate because you're dealing with kind of an area of where buyers and sellers, where there's a little bit of an imbalance. So as we drop down onto our daily, right, we can see we get a lot more data here, right? We can see how price tagged down midline, yeah, or the range high of this lower range, sold off where to, found support here, tagged it again, failed to get above it again, came back down. Now, this was the move that really interested me here, because when we look back, we can see that we took out that low, yeah, which was also a deviation below the mid-range or the range EQ, and then look how fast that expansion was up to here. Now, we saw this initial rejection right here, but look what happens. Price comes up, rejects, sets this low, right? Doesn't break down below this low. Look what happens. We actually get expansion higher. We get this nice consolidation here. Ultimately, what happens again? We wipe out these lows, deviate, come back in the range, first to the mid, right? And then almost perfectly to these highs. So now we've done that. What was the expectation? Well, actually, for me, like I said, when we lose these, I would have preferred to see price run this level, yeah, to take out some stops. But I think when we look back over here, we can see that we had these key highs here, as well as some resting liquidity above here and here, right? So when that came, that might have actually, yeah, that one was already tagged by that. So it was this here, right, in my opinion, when price interacted with that. Let me just draw that in a bit cleaner. Okay, we can see here, price came in, found stops resting above here. This was enough, as well as being combined with this area, which I think probably an area that a lot of people were looking at around here. Why? Because when we look at it here on the daily, we can see how price came in. We've got these lows. Price came in, big impulse move through it, leaving a small inefficiency. No inefficiency here, actually, but a big, strong, two strong closes through the level. Ultimately, it's this retest here. Then when price started to break down, yeah, this was our displacement. See this strong move lower that leaves this fair value gap. Price retraces up to here, right? This is basically the move that created this EQ, certainly for me. And then price sold off. So this was always going to be a key area of interest. Now, because we've run that, what do we expect? So, like I said, if we're coming up to the range high, we're targeting the range low. Now, what's interesting about this move is we can see this really strong move below here. So how can we use that? Now, for me, I'm looking for the inefficiencies, or I'm looking for the fair value gaps in this. And here we can see we've got our daily. So with price now coming up into here, is this a pullback before price then looks to ultimately search out liquidity lower? We can see as we look left, we've taken the liquidity from those lows. Yeah, so any stops that were resting below there have been triggered. People have closed out the positions, or the theory is that obviously people that were long here, yeah, their stop losses become sell orders, right? I know I go on about this every week, but it's kind of simple liquidity process for me. And I'm always thinking when we come into that, if you're a big player, yeah, and you've got a load of liquidity resting down here in sell stops, right? So if you want to place really big orders, you need there to be enough orders on the other side of that to fill your orders. For every buyer, there has to be a seller. For every seller, there has to be a buyer, right? So if you want to buy a lot here, right, but the problem is that the risk is that if you're buying with the market, yeah, that your first order might get filled there, but your subsequent orders end up getting filled higher up, giving you slippage, and they're really kind of impacting your risk to reward. So as price comes into this level here, this is going to kind of induce a lot of sellers, yeah, sell orders, stop losses that are below here, breakout traders that are looking to play this down lower, okay, especially bearing in mind we're trading this in with the trend. So this is quite a clever place, in my opinion, for big players to get their orders filled. So if that's the case, they've got orders filled there and we get this reaction. Now, what makes this a little bit dangerous, we've got this fair value gap up here as well. And if we're looking to our principle of premium and discount, if we're looking at this leg as it sits, then we want to be favouring our shorts from up here. Yeah. So I wouldn't be actively looking to short this move down. The time to short it was in the upper half of the range here when we saw the initial breakdown. Okay. But that's relevant because there's still nothing really telling us at the moment if this isn't people closing off some positions because people that were short, up here, yeah, they've got that nice drop now. They're ultimately going to be looking to secure some profit at some point. So for me, I really want to see what price is doing with this fair value gap here. All right. So if we now drop down to a 4 hour, this fair value gap can tell us a couple of things here. So first of all, there's a fair value gap here that I'm interested in as well. I'm going to I'll leave the daily one in. Actually, I'll just do this in a different color. So 4 hour fair value gap here. This one is a bearish fair value gap, right? So let me get rid of that. I'm going to do this in red. It's representing the lower time frame fair value gap. Now, this is an imbalance, an inefficiency here, what ICT would teach as a SIBI. Again, if you want to kind of study ICT stuff, I'd always recommend going to the source, right? I think using his Core 22 mentorship now would probably be a good place to start. I took the old mentorship. And like I say, I'm not an ICT purist. I think he's a fantastic trader with some really, really interesting concepts, but it was a big part of how I kind of learned. And then again, with, probably one of the biggest influences on me was Trader SC as well. But either way, or whoever you learn this from, fair value gaps, inefficiencies, imbalances, etc. What we're looking for are these gaps, right? Now, how I interpret those gaps are one of two things: manipulation, meaning a forced move to get price lower or forced move to get price higher, or as a symbol of when buyers and sellers are stepping in. Yeah. So when the orders get to this point, what you've got is this is an inefficiency or an imbalance because there were just no orders in here. Basically, the weight of sell pressure is so strong, price has dropped to here and it's found its next buyers down here. They've then been eaten up. We then get this next fair value gap in here. That gets revisited, rebalanced, and price comes down. However, we have left this, right? And price does like to rebalance these areas. So looking for what price does when it gets up here, okay, is an ultimate question. But before we get carried away with ourselves and looking at recency, what we're looking at here is price coming down, setting this bearish fair value gap, right? Now, what price is currently doing is price has re-entered this area, had a small reaction, but is now expanding higher. So if we see this hold, and in a really ideal world, if we also see this flip to support, then this is the kind of thing that I'd be looking for in terms of bullishness, right? Because by closing through these, with bullish fair value gaps, I'm looking for this to be inverted or flip to support, meaning that if we come back into this area, exactly the same with the daily fair value gap, this would be a base I'd be looking on the lower time frames for price to kind of build some momentum, build some bullish momentum, and structure, and then we can look to get our entries to day trade up to the midline. Ultimately, we recover the midline. Then we know that we've got this fair value gap as a really, really tempted target if price wants to move higher. Okay, drop it down onto the hourly quickly. And this really shows us this expansive move higher, all right? This started in New York yesterday. So what happened here? This is New York, right? Session starts about here. The orange dots are London. So we had price come up a little bit through Asia, and then it sold off during London, right? And what ultimately happened was we ran the liquidity below these lows, took out this high. This is the high that swept the low. And what have we left in here? Our fair value gap, Price came into that and ultimately expanded higher. We leave this breakaway gap here, right? Price barely touches into that. Let me zoom in a little bit so you guys can see that clearly. And for me, this is a sign of strength, right? We've just dipped into that and then look at the expansion higher. So the optimist in me is saying that this is price gearing up, ready to move further. So ready to move even higher. We've had this expansion here, but I want to see this area hold now. So we've had a lot of up. We've also taken out a lot of liquidity resting above these highs. All right. So now I really want to see price kind of consolidate here a little bit. Yeah. And then what I'd ideally like to see is a move like this, which is where we would sweep liquidity, regain market structure, or a market structure shift where we move from setting lower lows, lower highs to a higher high. Okay. And then in this leg here, which is our displacement leg, because it's the one that has the sweep and then breaks structure or shifts structure, I'm looking for imbalances, fair value gaps in here for price to retrace to before moving higher up. Okay, so that's the plan at the moment. I have no interest whatsoever in trying to jump on board this move here. We've been showing a lot of strength, right? So I think the time to kind of jump on this move, like I was saying, was yesterday when we got in down here. On the lower time frames, I actually got the trigger to short this and then to long it as well. I was in a position to be able to long this one, but we did catch a nice 3R short yesterday with the group. But as I said on there as well, and I did say this beforehand, if we're getting this kind of move to the upside, then obviously price is reaching higher to take out some of this liquidity. I thought we'd get more of a reaction here at the prior day's high, which was this, yeah, and also the prior day's high. All right. So if you want to look at stuff like that, guys, there's some brilliant indicators you use, but something I always recommend is just turning on your session breaks. This used to be on this little dial down here, but this is in your chart settings now under appearance, and you've got session breaks here. You can make them kind of any color and width and that you want. I just keep them gray because I like them to be a little bit less obtrusive. 1 second, guys, just going to pour my tea. Okay, so when we're looking at this, and while you're getting your eye in on this, yeah, I mean, it's easy enough to do, right? Look, you look at the prior day, which is here. You look at the low of that day, which is there, and there's your prior day's low, right? You sweep that, look at the reaction that we get, okay? Now, let me clear some of this up. Managed to turn my session breaks off at the same time. There we go. So with a lot of institutions and major players respecting heavily prior day's highs and prior day's low, because a lot of trading is done on the daily, right? So look, this is this day's high, yeah? We sweep this in Asia, we get the sell-off, yeah? That day's low. Sweep that here in London, and we get that nice reaction to the upside, yeah? We can also do that 2 or 3 days prior as well, because if we start looking at this one here, which we set Friday, price still, when it interacts with it, look, has that reaction. Why? Because it's a really clear and obvious place in my mind for stops to be resting. Why my wife now, Dave? Tea, absolutely, mate. I do really enjoy coffee, but it just wires me up too much, unfortunately. So a little bit of Yorkshire tea goes down an absolute treat. So that's why I'm looking at prior day's highs, prior day's lows quite a lot, right? The way that I trade, I'm looking for liquidity. No matter what the time frame is, you can break this down using a triple screen system, meaning that you have your high time frame, medium time frame, and your low time frame. Your low time frame being your execution time frame. Okay, so to give you an example of how I trade, I really like the 5-minute chart. Let me see. Where was the trade from yesterday? I think it was here. So here we go. So this is where we could have flipped long and short. Why? Because here's our prior day low, which we got this beautiful sweep on. B-Pro had us bearish with the trailer, right? So that helped in terms of confidence. Obviously, in terms of structurally, we were bearish as well. But I do like using the B-Pro trailer. I do find it helps kind of visual elements sometimes in terms of keeping up with the overall trend. So look, as I know I sound like a broken record sometimes, guys, but for me, I like to keep it really simple. Yeah. So here we got the sweep of liquidity. Yeah. This was the impulse move lower. Yeah. So it has to have displacement for me, this move, right? So what we see here is this is the move, this is the fake out, yeah? So this is where price reaches up, and this is at the beginning or just slightly into the New York trading session, right? So this is where we look to see if the market's going to fake out one way or the other, take the Asia high, the Asia low, or sweep general liquidity, all right? Which we've got here, resting above this high as well that was taken, and ultimately this high here. So when that's done, we can see straight away that reaction, right? Look at that pin bar candle or that shooting star, right? That for me is really, really key. Now, the next thing that's key is we need to shift market structure. So this low here that was taken out, price comes down, sweeps this low. What do we get? We get this fair value gap left in the sweep. I don't know why that snapped to there. Right. We get that market structure shift. We've taken out, set the high. This is now a lower low. Yeah. And we get our displacement, this fair value gap, this grey box. Yeah. So that's the trigger there. So limit orders were on here. This is ultimately where we triggered it down to. We got to target 1, we got to target 2, which was our prior day low. And then we got the reversal. Now, I did post this on Twitter that I thought that this was particularly, it could be a really interesting setup. Unfortunately, I wasn't in a position to take it. Also, committed to the trade that I was in terms of moving down. I had the limit orders set on there and I was looking to get out at this point. However, we can see we took the prior day's low following the same rules. Okay. We came out, ultimately took this high, which is just because it has to have a lower high to the right and left of it. But we take out this cluster of high here. What do? Leave this displacement, right? Ultimately, you could also look at it on this leg as well. You have the purge lower. You have this internal high here. Yeah. So we've got our local swing high here because it's flanked by 2 lower highs. Price runs up, leaves this inefficiency here. Price retraces to this level and then ultimately sells up. I did actually feel like we were going to get some more downside after this move. I thought that if price kind of didn't react strongly here, that we were going to purge a lot lower. Yes, this would have been obviously the bigger move to be a part of, but we book 3R, we get a lion's share off the table for the day, we leave a little bit running for lower targets. Happy days. My wife now, Dave, Yorkshire tea is my favourite tea. Also, awesome, mate. And you'll be absolutely thrilled to know that the good readers of the Sun newspaper, of which, no offence to Sun readers, I'm not one, but someone did send me, a fellow tea lover, that Yorkshire tea has again won by a very hefty margin the favourite tea of Britain. So good luck to all those Yorkshire tea drinkers out there. It has always been my favourite. So before I digress too much, one thing I wanted to look at today, which I get asked questions a lot about, is having a specific setup or a specific system. Now, there's a lot of different ways to build a a successful trading system, right? And the key thing is that you understand the data, you understand your trigger mechanisms, you understand your high time frame bias, your medium time frame bias, you understand what you're looking for when you're looking to enter. So for me, it's really, really simple. I need to see a key level swept. I need to see a shift in market structure. And in that shift in market structure, you want to see it done with energy, leaving a fair value gap. For me, it's telling me, look, the absorption on this wick down here is telling me that buyers are stepping in. The impulse move higher that shifts market structure, or this one that breaks market structure, both leaving these fair value gaps, give me an opportunity to get into a trade. And then I just want to see a good risk to reward as I go up. And this was exactly the same. My bias was bearish. We swept the high. We hadn't run prior day's low. For me, if we've taken liquidity below the prior day's low or from above the prior day's high, then I'm looking for my breakdown patterns there, regardless of what the overall trend is, because you can get a good corrective move there as well. And I'm happy to jump on board that as a day trader as well. Leah, hey, bud, you have made me need some tea. Awesome. I think the world would be a better place if people drank more tea. Drink Yorkshire tea in Poland. Johnny Rotten, you legend. Brilliant name and fantastic country. Obviously the home of the legendary Crypto Burb. That isn't me, by the way. I know a few people that tune into these things think that it is because it's transmitting from the Burb Nest thing, it'd be incredibly arrogant for me to be calling myself the legendary Crypto Burb, and he is genuinely one of the most humble guys you'll ever meet. But lovely people from Poland, a lot of really good Polish traders emerging as well. So maybe the Yorkshire tea will help give you that little bit of an edge, mate. And good old Sun Readers is exactly right, my wife now, Dave. So in terms of sort of building yourself a successful trading system, really important to understand the hours that you can trade. You will find that there's a lot of noise on Twitter, other places as well, that it's really, really difficult sometimes to have your own conviction when you see so many other traders and well-respected traders posting a lot of stuff on Twitter. So what I would suggest to anyone, and this is, coming from me, someone with, a Twitter presence, not like the biggest presence in the world, but, when I was kind of learning this, really wasn't on Twitter like it is now. But even when you develop at a later stage, make sure you're kind of following people that fit your trading system, right? Because what you'll do is you'll be trading your system and you'll hit a series of losses, right? It happens. Happened to me a few weeks ago, 3 losing trades in a week. No problem. What do? Do I panic and do I then think, God, I need to find something else? Absolutely not. You just accept that through testing and through time that's part of the way that trading works. And actually coming to accept that is one of the things that will really, really help improve your trading. One of the things I see a lot of people do is panic and then rush to Twitter or go somewhere where they're looking for that silver bullet, that magic answer. And it doesn't exist, right? You just need to trial and test these systems. Wealth and success is built over time. And always remember this, that money is a byproduct of good trading, right? Money should never be the goal with trading. You want it to be education. You want to understand your system. The market is constantly evolving. It's a never-ending journey. And then you want to get yourself to a point that you can build systems that are profitable over time. Look at Burb. He's a prime example. He wins, I think, less than 30% of his trades. But the trades that he wins have huge risk to rewards on them. Every trade he loses is 1R. And I think his last trade did something ridiculous, like double-digit R return, right? So over time, that strategy is incredibly profitable. And you've got that tested back for decades now, right? And I think that's what people want to do. I get a lot of people reaching out saying like, okay, what system would you use for this? How would you do that? What about this thing? What about that pattern? I think what you'll do is as you study trading, you'll find time frames that are not only realistic to you, but logical as well, right? Like no point sitting there and trying to follow scalpers and day traders if you really can't give that kind of time to the charts. If you need to execute on a 5 to a 1 minute chart, yet you're at work, you're balancing a busy family life, it's not really going to be practical. Where trading like someone like Burb does using the B Pro, right? And obviously his immense market knowledge as well as a CMT level 3, he can look at that and say, okay, I understand where the trend is, I understand where my upside targets is and where my risk is, and I've got a clear point of invalidation, and his trades will play out over days and weeks, sometimes even longer, and that can be more suitable, especially if you've got a busy home life. Couple of questions. Bernd, my good friend, the Burb Nest BC, don't you think the engulfing bearish weekly candle shows a weakness and this is just a retrace? Yeah, okay, really, really good question there, Bernd. Let's discuss that with fine people on stream here. So actually, let's turn off B Pro here. So yeah, I completely agree with Bernd. And actually, as I said yesterday and earlier as well, that's why my kind of bias was bearish in here. I thought, we've got this coming in. If we close this down, it's a bearish engulfing. I mean, it's just... oh, no, maybe it's not actually, mate. Just under, actually. It ran the low of the prior week. So maybe that's the bullish reaction here. We've run this low of the prior week as well. But you're right, maybe on Bitcoin. Let's have a look. There we go. That's the one you're talking about, isn't it? We didn't quite get it on ETH, but on Bitcoin we absolutely did. And there's a key level around here, which is just waiting for this chart to load a second. There we go. Exactly what's on there. That green line, right? So that's really interesting me on Bitcoin, because for me, this was a point of interest. Why? Because we found resistance. Price came back down. We left these doji candles, right? But this is when we ran this prior week low here, right? And we started to get this expansion. We then ran the prior week's high. We came down. I was expecting price to move up and sell down, but it didn't. It found quite a lot of strength here. And then when price came in and it's run this low here, yeah, we can see that it started to build a bit of momentum back to the upside now. But I agree. If I was looking at this, especially on a weekly scale, I would really want to see Bitcoin close above this level, right? Because we did here, and then ultimately price got shunted straight back down. I think people, a little bit of exit liquidity going on here, pumping the price up higher, lots of positions being closed, lots of traders getting trapped. That was max pain for them. Price flushes out lower, giving people the opportunity to buy lower down and ultimately trapping these people here. Now, there's an argument that when you see trap traders and people holding these positions, especially if you've got big players involved, that you can then see price, trying to mitigate, trying to get back up to this level to close out as close to break even as they can before ultimately then dropping further. We can see here as well, we've got this big weekly fair value gap that we barely touched on this second candle before flying off. So again, BTC for me at the moment, it's very, very kind of choppy trading, right? Very much liquidity games. I typically focus on the lower time frames anyway, but very much so at the moment. But as we said with ETH, right, what we can look at here is we can say, okay, look, we had this bullish, fair value gap. Price expands higher. Price then rips back through this, right? We get this little inefficiency down here, which we're looking for price to return to. Ultimately, it busts through that. Now we're kind of back at this level. So I think for me, where prices kind of run this on the way up, run it on the way down, I know there's some people that would say, okay, look to this possibly for support before moving higher. But I'm not sure if that whole kind of price range here has kind of played out a bit. I think if we're looking for something like that that's got some good confluence to it, I'm looking at this very small fair value gap here, bearish fair value gap, strong move through it here. I think ultimately, if we look to pull back to this level here, yeah, and then we get ourselves back in some bullish market structure, then I think we can see price move up, right? We get the strong close above here, because look at this here on a daily scale, yeah? Look at all these long upside wicks just getting rejected. Now, there's nothing to say that today isn't gonna finish closed back below this, in which case then I think it is a sign of weakness, or certainly a sign that price is struggling to establish itself above here. But I think if we do get this close, I'll be interested to see price come back down to these levels on the lower time frame and ultimately see if we can get some long setups, because it's really nice and clean, isn't it? If we then come back below this level, lose it and retest it, we've got these inefficiencies down here, then maybe price really is looking to correct a lot deeper. C-Ron, my man, how are we doing? I've had to stop following some traders. I was getting confused and mixing styles and going away from my own strategy. Absolutely. Really, really key thing to say there. There's some really exceptionally good traders on Twitter, right? You look at Burb, you look at my the Burb Nest fam that I've got as well. Some really truly amazing traders on there, and obviously your real legends in the space, people like SC. You've got EXO, obviously Chase. These guys who are really, really big people that I kind of discovered as I was developing as well. And there's a really awesome British guy as well, Tyler Durden, right? Really, really good trader. Again, higher time frame stuff, but a lot of these guys aren't really trading the same time frames as me, especially people like Exo, Durden. They're much more kind of swing trading on a higher time frame. So it's all well and good, and I love watching their stuff. I think there's not just immense traders, but I think they really convey their points very clearly. But I can't let that influence me, right? Because it's no good if I'm going on there, I'm looking at them and they've got, say, a bearish bias. Now, that's based on completely different things to what I'm looking at, yeah? So I can be bullish when they're bearish and both of us can be right, yeah? And vice versa, because I'm looking to trade much lower time frames. So while they're bullish on a higher time frame, I might be playing the bearish trade that's the correction in the higher time frame bullish move, right? So it can become really, really confusing. And I think people lose a lot of confidence in that. So I think knowing and understanding who those key people are, and especially if you're getting alerts, yeah, then I think make sure you're aligning yourself with those people and make sure that they are really good people. Because while there are very good people on here, there's also a lot of people that talk complete nonsense. In terms of the fact that you can, once you're in the industry long enough, you can spot people that really trade and others that don't. I would say always make sure that you're looking towards people that are actual traders. I work for a paid group, or worked with a paid group, so I believe in that. I know a lot of people think that the education should be free, and that's fine. For me, years and years ago, when I entered the paid mentorship, it made a big difference to me. But there is a lot of good free information out there. The key thing is it's decanting it down into stuff that makes sense for you and not letting yourself get distracted. I work with a lot of traders who are looking to make that step, to make it their full-time career, and I think that's something that's prevalent. In most of them is the fact that they pay far too much attention to what their friends are doing or what other traders are doing or what the newfangled indicator or whatever is doing. I think if you're using indicators, I use some indicators. I love using the B Pro. Obviously, I've got chart separators, I have bits and pieces like that. But if it is that, make sure you stick to it. If you use a stochastic RSI, if you're using your moving averages and that, don't use them 1 week and then just abandon them the next. Spend some time finding a strategy that really suits your eye, things that you fit around your time frame, and then you can absolutely start smashing it, because you want to have a broad and shallow knowledge of trading that's constantly evolving in the background. That's your student in you, right? But then you need the trader that pays the bills, right? And the person that pays the bills has to have a system that's tried, tested, proven over time, and that they're willing to execute. So for me, the reason I took the short trade yesterday is because it triggered my system, right? I was looking at it, I got the move that I need, I got the sweep on liquidity, I got that displacement in the move lower, saw it nice and clean. So that was it for me. I wasn't sitting and thinking, what if I'm wrong here? What if I'm right? Execute, execute, execute. And it removes a lot of that anxiety. I remember that feeling when I was kind of starting out as a trader, and especially as I started to ramp it up and decided I wanted to make it a career. I found a lot of things very frustrating, and I think a lot of it was to do with the fact I wasn't kind of really, really sticking to my systems. So really good question, Cyril, a really good point, and one that I definitely echo. And Burned here as well, let's have a look. So it was BTC, yep, legend. And we retraced 50% and now perhaps rejected the yearly open. Yeah, that's a really, really good point. Actually, for anyone that's interested, talking of EXO, I found this old indicator last night. I was trying to clear out some of my indicators because I test a lot for different people. And I went on there and I found this one. I was like, EXO trading levels. I was like, awesome. I remember using this a lot, right? And look, okay, you just go on there, monthly open, weekly open, daily low, daily high, daily open, Monday low, Monday high, Monday open. It hasn't got the yearly open on there, right? Which you can easily do by just zooming out to your yearly candle. But it's really, really cool, right? Just leaving this on for a second. Yeah. You can just see them, really clear lines. Obviously, they change from point to point. But what you're looking to do is you're looking for that interaction. Yeah. What happens when you lose a level? Yeah. What happens when you get above it? If that's something that you guys use, honestly, I think that it's a really cool bit of kit. So I added it on there to show you guys today, actually, because it's a basic bit of kit. But like most of them, sometimes the basic ones really, really are the best. And like Bern's saying here about the yearly open, if you're using, like me, yearly open, you're using the weekly open, monthly open, stuff like that. They're key levels that a lot of traders pay attention to, and also a lot of algorithms, bots, bits and pieces like that. Again, if you're using it, be consistent with it. That's a really good indicator that shows it, if you're interested in using that. But a really good point here from Bern, retraced 50% now and perhaps rejected the yearly open 2021 at 289. C-Ron, I couldn't have put it better myself. I'm sure you could, mate, with those beautiful dulcet tones. And Sebster, I am well. Thank you, buddy. Good to see you on the stream. Hope everything's going well for you. So does anybody have any alts that we want to look at? Let's at least close the session off with looking at an alt or two, shall we? Or it can be a traditional market asset, it can be a Forex pair, we can look at equities. What do we fancy? While we're having a look at that, actually, let's see what ES is kicking off today. Yeah, so again, showing a lot of weakness here as well. Nice. All right, buddy. Yeah, let's take a look. Okie doke. So we got 3 there. Should we see if we can smash 3 top downs? We're going to do... good Lord. Right, so Matic. What was the other one? Yeah, Matic, please. You're welcome, mate. Sol, FTM. Cool. Right, let's start with... What was the first one? Matic, wasn't it? Okay, let's take a quick look at Matic. Let's turn these off for a moment. And let's get ourselves a nice clean screen here. Just add this all in as test data. Right, so let's zoom right out, shall we? Yeah, whack. Remind me on that one, mate, and we'll take a look. And Solana as well, and FTM. Cool. All right, we'll focus on see if we can get those four done really quickly, shall we? Let's have a look. So weekly scale. What are we looking at here? It makes sense, really. I suppose that this high is kind of capping the market here. So when I'm looking for a high or low, whatever particularly is what I would consider to be kind of capping the market, we obviously had a key reaction here. If we drag this back, yeah, now it doesn't quite sit with this, right? But we can see when we expanded above this level here, support, deviation, big move higher, right? Come in, found support. Ultimately, we then lost the level, sold off, had this interaction here, sold off again. So now the big question is this the deviation with price getting back underneath before it sells off lower? If that is the case, we would have been interested in this low here, which we haven't quite tagged yet. Okay, we can see that there on a weekly scale. So obviously, one really standout thing here on the weekly is this big bearish engulfing candle. Now, Pedma7, Pedro, really good friend of mine and fellow trader at the Bird Nest, builds unbelievable trading systems, algorithmic systems, bots. Did a study about engulfing candles, yeah? So engulfing candles with the trend or engulfing candles against the trend. And I find this really, really, really fascinating, okay? So as we establish this uptrend here, I know it's a bit tricky. We're on a weekly scale here, yeah? But we can see these bullish engulfing candles. One here leads to the uptrend. One here leads to the uptrend. One here leads to the uptrend, yeah? Now, when we're bearish here, yeah, so we're in a bearish higher time frame trend, lower lows, lower highs, yeah, we can see that the bullish engulfing candles aren't working so well, are they? Yet the bearish engulfing candles are working lovely. So he did a brilliant study. Really do go and check him out on Twitter. He's fantastic, and for someone like me, I use those kind of candle patterns a lot. And to find how much more successful they are when you're trading with the trend might sound obvious, but I found that really, really interesting. Now, I want to mark this level here as well, which I'm going to do in a thinner line because that's our prior week's low. Yeah. And then I like that high that sat there. So we can see what happened when price came in. We've had the reaction at this level. We have got quite juicy liquidity resting down here and also under these lows here, which remain untapped. So that's definitely worth noting. However, if we're looking at this in terms of a displacement leg, then if we're looking to short this back down, my favoured place to do that would be here. Let me do that red so we understand that's a bearish fair value gap. So I'd be looking for price to come into this here, yeah? And it's key for me because it's in the upper 50% of this range made by this leg down. So that's up in premium, which teaches us with study and time. And if you look at ICT concepts, that this is favourable to short from up here and you're looking more for longs down here. So if that was the case from down here, right, and I know we've got this little fair value gap here as well that we're competing with at the moment, then on a daily scale, if I want to see price get up to here, if I get my triggers and I can get my confluence and my bias in place, there's nothing that stops me playing the long into here, yeah? And then looking for short opportunities here to play it back down. Okay, this is all to do with the idea of understanding the different time frames, yeah? So from here, let's drop down to an hourly. I'll show you how I would kind of be looking at this anyway. So again, we can see yesterday they gave us this beautiful move during the New York PM session, right? We had Asia and London both selling off, which means we look to see if we get that reversal, all right? Now, we can see here, we got this move higher. Now, price is ultimately hunting the liquidity above here. We've taken out the liquidity above here, got that initial reaction, a little pullback, then we came up to this liquidity and this liquidity here. Now, while there's liquidity resting along here, yeah, we can see that really what we want to be doing is targeting this if we're looking for our shorts. So the risk that we have here at the moment is jumping on board with this. However, what we can do, looking at this on this scale, is I'd be looking more towards kind of an hour or two's time when we're going into New York, but using the same principles that we used here, if this is our current leg, and assuming that price action stops here, yeah, then we can look for our fair value gaps, of which we've got a very, very small one here, which would be bullish. And ultimately, we've got this one here. So if our expectation is for price to move higher towards that bearish fair value gap here on the higher time frame, yeah, and assuming the price does stop here, we'd need the down close candle to confirm it. Then when price comes back down to one of these points of interest, this or this, then on the lower time frame, what we're looking for is that pattern, that sweep, that break of the high, the retest, and ultimately price to move higher up. All right. So that shows us we've come into our point of interest. We've taken liquidity. Yeah, maybe even it's the liquidity below there. Then what we've done is we've come up. There's the sweep. Here's the break of the high that swept the low. Yeah. And then we look for price to come back down into a fair value gap, or I look for price to come back down into a fair value gap that's down in discount, right? So bang, look for our entries here, price can move higher. What stops us getting into losing trades here is that if we don't get that, we don't have to take it. Yeah. So if, say, for example, we've still got that setup there, right? But we don't get that. That's what we're looking for, right? But price ultimately does something like this, then we don't have to enter. And that's why I like entering with confirmation, all right? So ultimately, as I'm looking at this here, I'd be looking at the New York AM session. So I'm looking for yesterday, which we've got here, right? We saw something a little bit similar in terms of that we came down, swept liquidity, yeah? Taken out liquidity here. Let's just symbolize that by showing that. We also got a smaller sweep down here of these lows. Do we get our market structure shift with displacement? We absolutely did. Here's our displacement leg. Fair value gap down in discount. And there was our entry, right? So exactly as I described in that move up there, that's what we'd be looking for if price decides to retrace down into here. Now, if we were looking for the opposite of that, right? Let's say, for example, like we got in our New York session here, we got a clear run of liquidity here. Yeah. Then we get this move lower, right? And that move tells us a lot, because we have this bearish, remember this bullish move higher that leaves this fair value gap. Remember, like I said about that when you're going up, if you're leaving these fair value gaps, this is either price telling you that the buyers have stepped in, but we've not had any sweep, so there's no point, we're not looking to go long here, right? Or it's manipulation. It's the market being driven up there to get these people long, to take out these stops. And then when we get this move here, and these moves can be incredibly potent, as we just discussed earlier, we get these overlapping fair value gaps, yeah? Between this one and this one. So we can tighten that in so that they cover this. Ultimately, we see that's the destination for price there, but we don't know that at that stage. What we want to see is that impulse move lower. We take out these lows with this, but we don't retrace. So we get the extension of our displacement leg down to here. And then we need to have our fair value gap. So we've got this fair value gap here, and we've ultimately got this one here as well. Price retraces into this, stop losses above this, and then we're looking to trade it down lower. So if we go higher from here, let's say price just continues to run to come up towards our key point of interest on the higher time frames, and we're looking to short that, then we'd be looking for a sweep, and we'd also be looking for that. Now, for me, I like throwing in some confluence here from the B Pro trailer, and we can see that the B Pro flipped bearish right here. Yeah. The bottom of this move, as price retraces, we've got confluence from our B Pro. We've already had the breakdown pattern. We've got nice, clean targets lower down. Ultimately, price comes in, sweeps these, and we actually then get the reversal the following day in New York. Now, I like trading the New York session or sessions that align with that. I know crypto doesn't respect the traditional markets, right? I'm not saying that for a second, but what I am saying is that that's when you get a lot of volume stepping into the market. And I do really like trading that New York session. It also helps me kind of plan my day out around as well. So in terms of Matic, I think that's what we'd be looking for there. I think someone said Solana as well, didn't they? Let's have a very quick look at Sol. Here we go. So daily scale, we can see here again, B Pro kept us in this nice bullish trend here, stopped us kind of going against the high time frame bias at the moment. A high time frame bias is bearish, right? So again, I think it's going to look fairly similar to Matic here in terms of that would be what we're targeting in terms of the bearish FVG. What did we get? Oh, we took out these equal lows here as well. That's a really nice sweep. This low, making equal lows. That sweep, that gives us a higher probability trade setup to the upside. Ultimately, we find that we had a very, very similar move down here. We came in, take out these equal lows, see that one and that one. We then sweep this. We get that impulse move higher that shifts market structure, a little retrace into the fair value gap and moves higher, which we would see here. Yeah, so here's our New York session. Price moves down here, takes out liquidity lower down, and then we ultimately break structure here with this impulse move. I'm not sure, we might not have actually got involved in this one. Let's see if it's within our, yeah, just. There we go. We tease down just into our fair value gap down here, which is bullish. And that gave us our entry there. So in terms of now what we're looking for here, price is actually a lot closer to this here. So I don't think I'd want to be jumping on board any longs at this point, right? I know we've got the support of the B Pro trailer as well. But for me, I think this is my real point of interest here. So let's just zoom back out on that a minute so we can just take a look. Just looking at what we've got in here. Something's clearly stopped the market there. We had this kind of small consolidation before the breakdown as well. So finding price kind of establish itself above this kind of level here. Obviously, there is support that we've got here as well as it comes through. Maybe this kind of area here. I think we want to kind of see that hold. Price has kind of come into this quite a few times here. Support, support, support. I know we've whipped through it there, but ultimately the bodies have respected it here. Then when we did lose it, retest it, big sell off, big reaction when we got to it again here. So for me, if I did want to kind of get overly bold here on the lower time frames, I'd be looking for this to hold. A little retracement back into here. Again, ideally, maybe even a little wick lower. You know, if we look at this move, a wick down here into this fair value gap that sits down in discount could provide us a really nice setup to then kind of push a little bit higher. But ultimately, I'm definitely looking at this area here, which is starting around 23,182. Yeah, I think if we start getting a pullback to that area, that's where I look at. So maybe day trade longs, if we get the scalp pullback to support, confirm it as support, get our bullish breakout pattern. Yeah, sweep of the low, break of the high. Look for it to push into here, but I wouldn't necessarily be holding these longs for the highs. I'd be thinking about this as a move up to a high time frame level that we're potentially looking to short. All right. FTM for CRON, of course, my friend. Right, here we go then. So we can see here on a daily scale what we were looking at before, right, in terms of our key swing highs. I mean, this was obviously from a while ago. We didn't get the reaction, the breakdown there, no problem. So what do? We invalidate it, right? We're not just kind of going into these things. The reason we had this one a slightly more high probability, you've kind of got these relative equal highs up here, right? You see price kind of starts to question its momentum here a little bit, right, as it's coming up. We'll draw this across here as well so we can see this as a really key level. Again, looking at this here, in an ideal world, I think if we're looking for shorts on this move down, you'd be looking at the fair value gap that's sat up here in premium. But I would definitely be aware of this one here as well. Price likes to rebalance these inefficiencies, right? And we're kind of coming into contact with that at the moment. We've again, have we got this resting liquidity still in play? It is. So when we came down here, we took out these lows. We never reached ultimately for this, which I find quite interesting. So for me, I think looking at this, I think it does make sense. Maybe we either get that deeper retracement there or we come into here, but this kind of area to then kind of come and take out these here, yeah? And then, from there we could recover or we could be looking for further downside as well. But let's just drop this down about hourly quickly and just see how this is looking. Yeah, so we can see here the inefficiency left, price comes back, barely touches, or that's where it's set, doesn't really touch it here. This was an interesting one because we can see as we dipped into this here, we had that initial reaction away. Now often, and you've always got to wait for this to be confirmed by the breakdown or the breakout, but often that's a sign that, the liquidity that was run here, again, these equal highs, has rejected price. So this is probably showing a bit of strength here, and this is kind of a manipulation looking to kind of trap more people long here before selling off. Again, I wouldn't be longing here. We'd need a down close candle to work out the move on this as well, but we would have wanted to see a move down again into discount here. So if I'm in here on the lower time frames, I've got my bias in place. What am I looking for here? I'm looking to see if we get the sweep at this level. So we've had this sweep. Ultimately, we haven't lost this. If we did get a really big move down here, an impulse move, like I said, that with displacement, I'd be looking for price to kind of come back into the fair value gap here and move lower. However, if we come up and kind of set this new high here, then we need to reset before we start seeing our patterns, all right? So I think, for me, for my systems, this isn't really the place to start longing this. And to see our shorts, I think we want to see them a little bit higher up as well, ideally too. So I did say to WAC that we got a couple of minutes left. What was it? STG, wasn't it, WAC? Let's have a look. Let's take a peek here. Well, it certainly had a nice drop, hasn't it? Kind of started creating this nice rounded bottom here. You can see that as it starts to get bought up, and ultimately we had that expansion higher. We've been taken out at this high here. We also filled this fair value gap in over here, which saw the correction lower on a weekly scale. We kind of had some words with this fair value gap. Yeah, ultimately price couldn't close above it and now has sold off. On this time frame, you'd want to see that moved, and then you'd look at taking this as your kind of initial target before then moving higher. We done here. Let's move this down to a daily. The other thing you can use with your Fibonacci's, guys, for sure, is if you're looking for these trend breaks, so higher, higher, low, lower, high, lower, low. Yeah, you can tell you've stepped back into a bullish phase here. You can take either these, or you can take it from the origin. Right, and if we draw this back here to the origin, which is when we go from setting our lower lows, lower highs to higher, higher, low, lower, high, lower, low, higher, high, higher, low, we break out here, right? Then we can see whether you're taking this one or this one. It depends on how you trade with your Fibonacci's, whether you're taking the whole leg from market structure break, on the higher time frames like I do, in which case when you've got that, we can see that we're having a reaction at the moment at the golden pocket. All right. So that's always something to keep an eye on, because that again is where you'll find a lot of buyers, a lot of systems, and that will be looking to buy this. Again, on this time scale, I just want to see this fair value gap overcome first of all. But ultimately, I think if we draw back up into this and we start to reject here, then I'm looking for price to move lower. Let's take a look on our hourly. Again, we got that nice move during New York. Take out those lows here, price drives down. Ultimately got the expansion higher. Just actually, price drove up through London. We got the correction, and then we got that New York continuation that was beautiful. Maybe not giving you a lot of chance to get in that kind of move up, as they often don't. So, look, I know it sounds a bit like a broken record here. A lot of these alts are going to look the same, but for me, this isn't really the place to long, because you've got to have clear invalidation. I've got equal lows here that price could easily whip below before regaining strength. But ultimately, this move up has been pretty quick. If I jump in here, I've got to have my invalidation below there, which is dangerous, or below there or here, and the risk to reward just simply isn't there. At the moment, I do feel like the short setups still have the higher probability. And if we move to, say, like a 4 hour, for example, we can see, still in this kind of strong downtrend. Yes, we've taken out this high, so we have shifted market structure, but we would need to come back, set a higher low, and then break that before we pull off and then really get ourselves into some serious bullish momentum. Let's have a look. The guy with the rude name, contributing nothing and just being a bit of a div. See ya. I love these people that are all just about, what about me? What about me? What about me? Well, be constructive, ask politely, or literally you will just get banned. So FTM, great. Let's have a look. We make, what else did we have here? Gentlemen, thank you. Awesome, guys. Yeah, look, sorry, I know that a lot of these alts are looking the same at the moment, which obviously they are. So it's one of those things that you have to be a little bit patient, right? And then you have to wait for these setups, and then you just need to know your triggers when you're going into them. For me, when you see these kind of moves, if you're not getting in closer to the origin, yeah, and you can do that still, obviously, with your lower time frame. It doesn't have to be a 5-minute, guys. You can make it 15-minute. You can make it an hourly if you want. But when you get these really big moves, it's very, very dangerous to get in here. You can look for these consolidations and these breakouts. But something I would say to people, if you're really struggling to kind of get this and focus on these kind of moves, it might help if you just make it down to different time zones. So look to align yourself with the Asia trading session, or London, for example, or New York. And then it kind of allows you to kind of narrow your focus a little bit more down onto those. So one more thing just to say that we should have a little quick look at before we close up for the day is the Dixie. Here we go. So there we go. So now on the DXY, we can see this level again, right? Proved really important here, has done so again. What have we done? Deviation. Ultimately, price had a big expensive move higher. This deviation here, not really showing that same expansion, is it? As we look at it here. I don't often kind of use these. You see I did here as well, and I think we've got a kind of similar situation here. That's kind of pretty much perfect when we look at how that is keeping price suppressed, yeah? Resistance. We get that deviation, pop above this, retest, and then I think we squeeze higher to this level, and ultimately January 2017's high. That was a really, really key level for quite a long time. But one thing that does kind of, that we can see down here, is that we've got our equal lows. Yeah. So whenever we have those, that can be a really, really keen target for price. So it could end up doing something really, really cheeky here, coming down below this level, really convincing people that the dollar is really, really on its way out before ultimately recovering it and moving higher. Now, it's worth remembering at the moment, in terms of what's going on with the oil states and them looking to move away from the petrodollar, that the dollar is under a lot of, obviously, bearish pressure, right? So that's the fact that the dollar's weak might not ultimately mean that those risk assets against it are having that same kind of reaction. But I do always like to keep a look at this. I do always like to keep a look on ES as well, right? So when we're looking at this, Typically, when we're looking for our confluence, we're looking for ES to be bullish alongside, that's the S&P 500 and the NASDAQ as well, NQ. We're looking for them to be bullish aligned with BTC, which means that there's strength or there's money going into risk assets, and that normally works out really, really well for crypto. All right, guys. So look, thanks so much for being around again for Alt Request Wednesday. Apologies if we didn't get round to all of the requests that we have. We'll start doing them a little bit earlier in the show next week. All right, guys, if you have got any questions, please don't hesitate to reach out to me on Twitter or come along and join us at the Nest. You can get free trials. You can also come and get our trading calls for free through our partner Bybit. You can see the link down in the description. But come and reach out. Come and have a chat with me on Twitter. You can get a free membership for a week to the Nest as well. Come and join, be part of our community there, as so many people have done. It's a really great community. It's for people that are really looking to kind of take their trading seriously, really looking to kind of double down and find out if this is something that they can pursue either as a hobby that earns them a bit of money in the background or maybe even something a little bit more career focused. All right, guys. So everybody that watched this was present today. Thank you so much. Everybody that's watching this on catch up as well. Do let me know if there's anything that you want to see in future episodes and stuff like that. All right. And like I say, I'm going to very keenly have my eye on the New York trading session, which is about to kick in shortly. So let's see if we get any setups from there. If we do, I'll be sharing them in the official calls at the Nest. And I'll also ping some ideas across to you guys on Twitter over the next few days as well for things I'm looking at. All right. I'm actually on holiday next week, guys, so I'm afraid there won't be a live stream on Monday or Wednesday, but we'll make up for it the week after and try and really roll out with some style. Wishing you guys a fantastic few weeks ahead until I see you all again. Thanks again for joining the stream. Really, really do appreciate each and every one of you. Have a fantastic week. Trade safe, trade smart. All right. And I'll see you guys around the Nest.